Come, let us prepare, make some good profits this week. Our market left us big clues right here. Let's talk about that in today's video. Most importantly, I want to teach you something here to remind you that the worst may not be over. You have to stay focused, not be absolutely complacent, even though you see large green candles like that, right? Better to safe than sorry in the trading world. So just keep a lookout here. But more importantly, I want to show you a particular algorithm here. Now, this is very important on Friday. You need to learn about this. And I just want to show you here. Now, this is at 10:43. You can see the timestamp here. So I've shown you on 21st November. Now, 10:43 is about, at this point, let's see. 10:43 is about, right here. So this is 10:43 a.m. Okay, pay attention to this because most importantly, you notice we identified the magenta algorithm, right? I'm going to zoom this in. See for yourself again, 10:43. This is a live analysis on the Discord server. Now, there was this magenta here. It's not truly highlighted, but you can see it here, right? A magenta. And just take a look. We had a magenta algorithm here as well. And I talked about how this may chop within the wedge. And see for yourself how we broke out from that right shoulder out of this range. Absolutely beautiful. Now, penny perfect. You need to just remove any sort of biases. Learn to identify good setups. Sometimes you get it, sometimes you don't, and that's absolutely all right. But in this case, we prepared perfectly for this. And very importantly, I talked about this and I mentioned any upside. I would hope some chop to yellow 653 here, and the pink algorithm exactly as it is. Now, identifying your liquidity is extremely important, and it's only made possible if you have the understanding of the algorithms right there. So this was an absolutely beautiful trade here, all the way to 5-day moving average right there. Now this one's 6-7 points right there on the break from that yellow, almost 8-point trade to the highs. And I shared a very important concept here. I talked about trying to protect the trade at 11:35 to the 5-day moving average if possible. Now 11:35 is right here, right? And you see we went there, all because you understood the precision algorithm in that orange. So this was quite an easy trade. And subsequently, I talked about the retest to the QQQ 5-day moving average. I talked about that at 12:10, which was about here. Once we retested the 5-day, right, we got to where the QQQ 5-day moving average was at that 664, right? So we talked about that as well. And so if you manage to hold your runners, and there is a skill to holding your runners here, right? And once again, understanding this pink, because this pink will give you a very beautiful entry of that 5-day moving average here as well. Absolutely, absolutely beautiful trade, especially with that. Now, there are some very important techniques here that I will share in another training video with the links below to the Patreon site. There are free resources in the Patreon site, so don't think that you have to pay for something. You can always download the free resources. They will be helpful to you. One of them will be an explanation of this particular trade. I will upload it tomorrow on Sunday. If you see this on Saturday, I will upload it on Sunday. So there are very important technical analysis right here that will break it down in that video. So please do check it out. It's important that you do because I've been having some issues with YouTube. So I have to split my videos between YouTube and Patreon, but they are still available absolutely for free. You just have to join. So please do so if you want more information here. As much as you see all these green, right, I want to be very, well, in a way, nagging you to remind you of some very important technical indicators right here. Now, we finally retested the bottom Bollinger here. It's been a while, right? Apart from this, right? Which was, as you can see, I will show you this later. Now, once we retest the bottom Bollinger, it became always something very exciting for us. And you see the last time we did that was in April. Now, there is a similarity here between this retest here, because this retest happened once we had a rejection from the 5-day crossing below the 20-day moving average. Now, there's something here I want you to remember, because this didn't happen only once. 5-day was already trending below the 20-day moving average. So the fact that it retested the 20-day moving average again and was rejected here and let it down to another lap below to the bottom Bollinger. Now, obviously, we all knew this was because of a negative catalyst due to the tariffs. And there is a very important indicator here as well, which was the 200-day moving average. Now, I want you to remember this because this is very important. I will track back to this shortly. But I want you to just remember 5-day crossing below 20-day and rejecting it thereafter, retesting the bottom Bollinger, right? So 5-day below 20, retest bottom Bollinger. Now, retest 20-day moving average again and rejecting back down and back to bottom Bollinger, right? Remember this sequence. Now, currently where we are, right, we have tested upper Bollinger and we have our 5-day crossing below the 20-day moving average. 200 days still long away, right? Still far away. But you can't say the same for Bitcoin. So let's just take a look at IBIT as a representation of Bitcoin. And you see that Bitcoin has crossed below. I will talk about this another time, not in this video. But I know some of you are interested in this. I'm not a fan of crypto. But if it helps some of you from gambling, if it helps some of you from losing your entire estate, I certainly will attempt to do something to help, but not in this video. Now, take a look here. We are currently trending down and 20-day has crossed below the 5-day moving average. So although you see a large green day, well, it's significantly large. It's a 10-point intraday range anyway. You have to be careful because this is conducted on the Friday. Shorts covering after a 20-day intraday dump, 20-point intraday dump. So you cannot be too conclusive about this. Just be slightly more careful if you're trying to call the reversal here. I will teach you when to properly call the reversal, right? Now, so if this wants to continue heading down, right, if you realize the sequence here, and that is to hope that 5-day crosses back up to 20-day. Now remember the sequence? Grab more liquidity and have a secondary rejection before we start heading down to retest the 200-day moving average. And by then you will see the charts following the 5-day and the bottom Bollinger trending down like that. And obviously the 20-day will start trending down as well like that. So understanding the sequence, you can be ready if this wants to continue heading down. Now in the event that the bears do not have to grab more liquidity from a higher price, in this case from the 20-day moving average, obviously you can see the bottom Bollinger and the 5-day moving average trending down together like that. Now, unlikely, very unlikely, but if there's a negative catalyst that's hammering the market, this is obviously one big possibility here. So watch out for the 5-day moving average and as well as bottom Bollinger that's trending down together with the upper Bollinger that's trending up. This is an expanding Bollinger band, means that large movements are expected, and that's where you get your high implied volatility in your options. So pay close attention to that. So now once you understand this, you wait for the understanding of the reversal. I want to track back to where we were at. Now, at that point in time, right, many people were calling for the reversal, especially after this magnificent 50-point day on SPY, right? This was an unprecedented day. It will never happen again, probably in our lifetime. I hope not, because this was full of insider trading, allegedly. But understanding this, you would see that even after that, there were plenty of drawdown days, right? To the effect of, well, about 40, 50 points worth of drawdown, right? Red, 40, 50 points before we start hammering back up again. Now, this was the last time that the bottom Bollinger was retested, and we had a magnificent bull run all the way. And the next time the bottom Bollinger was almost retested was about 4 months later. And this was impressive bull run. And you don't have to worry about missing this out if you don't catch it from here, right? And I want you to see when the confirmation was more likely was when the 5-day started crossing back up to the 20-day moving average after a bottom Bollinger retest, and you see the bottom Bollinger starting to trend up. So when you see indicators like this, right, you're putting more indicators to help you understand. Now, once again, I mentioned this. These are trend indicators, right? And your trade indicators, as I always have shown you, comes from your 30-minute chart and your 1-minute chart, as I shown you earlier on this pink rhythm here. Now, so when you understand that better, you will know what to be looking out for. So you can always afford to wait for your 5-day to first cross up your 20-day moving average. Now, back then, I also mentioned that once you see your 20-day crossing up to your 200-day, you are not too late, right? So when that happened and you see your bottom Bollinger also trending up, now even if you caught it then, 580, now you would still have caught. You see, we were at 650, 660 for a long time. That's 80 points in SPY. You still could have caught that all within a 4-5 month period of time. So you don't have to be worried about trying to catch the moves without a strong confirmation. So in this case, if this wants to head up, now you have to understand, if this wants to head up, it's aiming to get to 700 or even beyond. That's the point of a bull market, right? So if the bull market is to sustain, it's going to go even further than that. And so if you are trying to catch the upside, you can absolutely afford to wait for, firstly, the 5 to cross above the 20 and for your bottom Bollinger to start trending up again. And when the upper Bollinger also trends up at the same time, you are understanding that it's creating expected value for the charts to continue heading up. And you see that happening here as well when your upper Bollinger is just starting to continue trending up, right? Now, the upper Bollinger will start trending up once we retest it and you see the 5-day continuing its path up as well. So that's building liquidity on the way up here. So can you afford to wait? Absolutely. Now, personally, I like to buy stuff at a cheaper range. So you just have to always have some spare cash ready if you're looking for a discount in the market. Bottom Bollingers are one, but you don't put in all your money then. Right, you are always prepared to know that there is going to be, or there may be, more opportunities. Right, this is not too far away. It's probably, well, let's see, from the bottom of that day, this was at, well, let's just use a tool to help us with that. Let's see. No, can I measure something here? I think it's this tool. Yeah, all right, I'll just use this. It's just 5% away. So you understand that from the bottom to the 200-day moving average, it's just a 5% correction away. That's not even ridiculously unrealistic here. So maybe we do retest to 200 again, right? If that happens, that will be great. We will have more volatility in the market. But even if we do not and we start chopping here as well, that's fine. It's not a bad thing. So you just have to be more mindful at this point. We are at the precipice of breaking a range that we have been stuck in for a long time, for 5 months, because there just isn't much catalyst in the market. So just be more patient, slightly more patient if you're holding large amounts of cash. You just have to know when to be entering incrementally and not all at once. You see, that is also a gambling habit, that desire to want to put in everything you have, right? So you know someone's a gambler when they just put in, you know, that thrill that gets them. You see people like Warren Buffett just spending 5% of their cash holdings into a play and leaving 90% as cash, and people laugh at him. Who's the winner now, right? After several decades. And that's what you need to be doing. You need to be accumulating wealth for your next generation. It's not just for yourself, because the gambler only thinks about the moment, how he or she feels at that point in time when they come out from a verdict from a bet that they made, instead of thinking for their children, thinking for their family, thinking for even the future generation. So you just have to be more mindful about that, right? So understanding all these trend indicators very important. So let's take a look at the 30-minute chart, what to be waiting for. So I remembered I talked about this particular liquidity here, which I was quite worried about, right? And we had a 10-point day, and you see how we grabbed it so beautifully in that green algorithm. Now, this was in yesterday's video, where I also showed you a setup to the penny right here. Now, have you already forgotten about this? I talked about this here. Take a look at the timestamp again, 20th November, right? So this was at 10:43. Once again, 10:43 here, right? 10:43 a.m., right? And you see we talked about that magenta algorithm here. You see how we grabbed it so beautifully, right? To the penny only because you understood about the magenta algorithm here, right? And I talked about this, some bearish liquidity here, the magenta, right? So watch yesterday's video if you want to. The link is in the description. I have explanation there. It's the first time you're watching this, welcome. And right, we talked about that liquidity that's being grabbed here. Now, we still can very simply grab this liquidity that was built right here. So pay close attention to that. Well, also because we are, well, still technically in that orange selling algorithm here, right? Even though we had progress slightly above the 5-day moving average here. So 5-day moving average will most likely stay where it is if we open where we closed, right? So just pay close attention to that. And there is a likelihood that we grab the liquidity of this orange here if it wants to, right? So pay close attention to that orange, but otherwise wait for the blue. There will be more structure here, especially if 5 days starts to close down into that orange selling here. Now, any upsides here, the market is trying to grab the liquidity from the 5-day. The best case scenario is if we grab more liquidity and retest the orange algorithm and re-grabbing the 5-day as it starts to trend up to where the magenta is, grabbing the liquidity here. Right. Now, the better retest will be where the 20-day moving average will be. Now, 20-day moving average will be very crucial. Right? It will start trending down soon, right? And that's where we hope it retests your green algorithm here, closing the cup, forming in magenta, grabbing liquidity on the way up here. Now, so quite importantly, while you're looking out for the chop here, because as beautiful the volatility is, unfortunately, we are still pinned very tightly in this wedge. Not really tight because this is still a 15-point range wedge here. But if it lacks conclusive continuation, it can be a problem, right? Because this is where you get your 20-point down and 10-point up, and it's not comfortable for newer traders. So look out for your trend indicators before you want to make larger moves, larger bets, especially with your larger portfolio and your swing or your portfolio positions. But otherwise, if you're day trading, look out for the 30-minute, 1 minute as well, as I have always shown you how it can be done using the algorithms right there. So it's quite straightforward. Thank you very much for watching, and remember to check out the resources in the description. Thank you very much for watching. See you closer to opening bell.